Cecilia Tam, head of the Organisation for Economic Cooperation and Development's Clean Energy Finance and Investment Mobilisation program, recently visited ADBI to discuss efforts to promote private finance for energy efficiency and renewable energy in emerging economies. In this podcast, Tam describes the importance of creating taxonomies, or definitions, of sustainable finance and the impact it could have for green investment in Asia and the Pacific and beyond.
Summarizing really what are some of the benefits to working on sustainable finance taxonomies for the OECD is we as an organization hope that this work on taxonomies to come up with commonly agreed definitions either for one jurisdiction or more broadly internationally can provide increased investor confidence and avoid aspects of green washing and impact washing that we see as being quite a key critique of people trying to sell green products. We also hope that it can facilitate the labeling of investment funds and other products and eventually get to more global standards to allow for more investments in this area, increase visibility on what qualifies as being green finance products, and to help different countries develop sustainable finance policy instruments for jurisdictions in their countries to help scale up this area of sustainable finance. We look at green bonds. There's only about 1% of all global bond issuances that are issued as green. And it's an area we feel that needs to be tapped if we're going to hit our SDG and Paris climate commitments that require trillions to be invested. We need to find instruments that are much more liquid that investors can tap in this area, and also to help improve the integrity of the market.
Cecilia Tam goes on to describe the OECD's work to examine whether domestic policies are supporting or hindering investment in clean energy, as well as to promote policy frameworks that encourage sustainable investment.
We're defining clean energy as grid-integrated renewable electricity, as well as energy efficiency in the building sector. The 5 countries that we're working with are 3 in ASEAN, Indonesia, Vietnam, and Thailand. We're also working with India in South Asia and Colombia in Latin America. What can we as the OECD do working with and pulling on best examples in our member countries to support developing countries to set stronger frameworks to make it easier for clean energy projects to be financed in a given country jurisdiction. As part of that, we'll also try to help countries raise the level of ambition of its climate and energy targets.
Increasing interaction between the public and private sectors and aligning with think tank policy innovations will be critical to achieving new green investment breakthroughs, Tam concludes.
Here you're looking at bringing to the table the government together with project developers, commercial banks, both domestic and international, with development finance communities, both bilateral but multilateral, and institutional investors. You're getting more traction and more interest amongst both national and international institutional investors who see amongst their own pension holders a growing need to evaluate whether their funds are truly sustainable. Are they meeting Paris commitments?
This has been Asia's Developing Future, brought to you by the Asian Development Bank Institute in Tokyo. See the show notes for the transcript and related material. For more information about us, please visit adbi.org.